Hello Progressive Dairyman readers, I'm Melissa Heaney reporting for the advisory team here at Stewart-Peterson, and here are a few things that our team is currently looking at. Our topic for today's discussion is Class 3 milk prices. So as we've been seeing, there's been a lot of pressure in the milk market recently. This week we're down 78 cents on the week. A few fundamentals we have been looking at, for example, are feed prices. Now, we really watch the correlation between feed prices and milk prices, and the reason for that is because history has been showing us that milk can tend to lag behind the prices of corn pretty closely. So it's definitely something that we are keeping a close eye on as we come into the harvest season, and we really see these grain prices being real volatile as they trade weather and yield reports. So a couple other things we're going to be looking at here going forward are the block barrel average, July milk production, and monthly cheese stocks. Now let's take a closer look at the block barrel average chart. Now overall, we've definitely been seeing some weaker cash cheese sessions. Last week we saw a 1 cent decrease on the week, where we saw 0 blocks and barrels trading hands throughout the week up to Friday when we saw a buyer step in and purchase 5 blocks. Now coming into this week, we've definitely seen more sellers and less buyers. We are now down 11.5 cents on the week. We haven't seen this size of a price decrease since back in June. Now as we can see, cash cheese prices definitely put a lot of pressure on milk prices. So hopefully now, as the fall season comes in hand, we will be seeing more buying interest. So let's take a closer look at this July milk production chart. Milk production has definitely not been very supportive of milk prices, and the fact that we've been seeing these cooler than normal weather patterns over the last several months. And with the higher milk production, we've definitely seen some of that supply pressure in the market. Now taking a closer look at the chart, from June to July, we saw about a 9% decrease in production. Now taking a look at year over year, we have increased 1.1%. Now this is the 3rd month in a row we have seen year over year milk production increase from year over year. Now, with August also seeing cooler than normal weather, we should be seeing at least a 1% increase year over year average of milk production for the month of August. So let's take a closer look at our next chart. Monthly cheese stocks for July 31st came in at 1.152 billion pounds, which was a slight increase from June's cheese stocks. Now we're up 5.5% more in storage than we had this time last year. Now taking a closer look at the chart, this is the 6th month in a row which we have seen 2013 levels higher than 2012 levels. Now from a seasonal perspective, as we come into the fall months, we should see a decline in cheese stocks. With school coming into session along with holiday season quickly approaching, we should see an increase in demand, and that should definitely be supportive of milk prices. So here's what to watch for going forward. The next USDA supply and demand report will be out on September 12th. Again, it will be very important for us to see where crop production is at and how this will impact milk prices. The next milk production report, which is for August, will be out on September 19th. The next cold storage report will be out on September 23rd. Now remember, all this fundamental data that we have gone over today just gives us a very slight idea of where prices may go. However, there are so many factors that influence price. Therefore, it's a very good idea to be prepared for multiple price scenarios so you're not caught off guard. Now, make sure you know what you're going to do if the prices go up, if the prices go down, and if the prices go sideways. On behalf of Stewart-Peterson, again, thanks for watching and have a wonderful weekend.